Well, hello traders and investors. I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets and we're doing it from a neoclassical perspective. That means every day we ask ourselves what happened today. Where were the bars of significance, and if they were tested, how were they tested? Where is that supply and demand? What is it telling us? We use that to figure out what to do next in these volatile markets. As far as what happened today, we're going to take a look at that. If you want to subscribe, haven't subscribed, reach up in the right hand corner, do so. Do the show 4 times a week. Every Monday through Thursday is broadcast at or before 10 o'clock Eastern Time, archived on YouTube. Son of a channel, LA Little. What happened today? Let's take a look at the numbers and see what we got. As far as the markets, they wanted to go lower. They pushed lower today. They continued lower. We got the S&P down 0.81, 17 points to the downside. NDX took a pretty good beating, down 0.86. 1.14 on the Russell, stands at 1150.70. Russell's been leading us on the way down. But the real beating is taking place elsewhere. We're talking about overseas. The DAX itself down almost 2%. It was down 2.2. It's down 4% in 2 days, folks. That's getting towards an oversold level. We'll take a look at that. Hang Seng down 530 points, 2.5%. Takes it on the chin. And last night the Nikkei was down 3% over 500 points. It looks like it's down a little bit more tonight. Bonds shoot up the other way, going for the highs, folks. Record low yields in many countries, not just here. We're not quite to record low yields here, but we're getting there. Gold and silver pushes higher, dollar lower, and this market is giving fits and turns to some of the folks out there. Last Friday, told members we're going to pull out all those long trades we were doing. We got rid of most of them. Today we popped out of one of the other trades that we still had going on. Got a little better price actually than we got Friday, or about even. So we narrowed down, looking at what happened Friday. We narrowed down our holdings, got thin, so to speak, into what we thought could be a red day down today, and it was. Of course, now the thing to do is time another entry on the long side, try to make some money. But let's start here with the S&P 500. Now, what do we have on the S&P? Well, first of all, what we have is a swing point high. You see it labeled here with the H. That swing point high we broke. We got over it, right? Got over it for 2-3 bars, stayed over it, came back into it to test it. That's called a retest regen in our terminology, and what that means is that's kind of an early warning system as to whether or not this thing's going to continue to go forward or not. What's the direction of the break? Well, it was higher, right? What's the direction on the way back? Well, that's your retrace. And what you're trying to do is you're trying to hold the low of the swing point high, and if you don't do it, that says that that trend that was going up probably is sideways. It's an early warning system. You don't have to break a swing point low to know that you're not going to go higher. You can use your retest regen to know that. Today tells us that's the case. Actually on Friday it was slightly under it, which was one of the reasons we started pulling out of stuff. And today it tests back up into the air, gives it up, comes on back down, right? Testing into the next swing point high. And so that wide price spread bar there is the one it's testing into. As it comes back into that, that's a retest regen as well. It's the first time back, if I remember right. I think it's the first time back in more than 6 bars. Let's see, 20, 84, 87. The low here was 85, and this low was 85. Yeah, so we never got into it. So if I clean this back up again and show it to you, this swing point high, the high of that high, is lower than these two little tails that you see coming back into it. They don't get into it. So that means you went more than 6 bars before the test began to occur. That's what's happening right now. It's in there. So as it comes back more than 6 bars, what does usually happen? Well, it's usually going to give you a bounce. There's probabilities associated with that. It's in the books. It's in my seminars. We start the seminar tomorrow. If you've been watching me, we signed up 10 new members. And those new members are beneficiaries of the first seminar that we've tried to do to teach new members the neoclassical methods, the model, how it works, the probabilities associated with it, all those things to make you a better trader. And so tomorrow they'll see this probably as an example when we start going through material, and that bounce is expected. It's got probabilities associated with it, and it's a fairly high probability. So expect this market to try and bounce out of here just as a result of a test of a swing point high after more than 6 bars. If we move over, look at the NASDAQ. NASDAQ itself, not nearly as strong, right? The strongest index over the last, about 3 months now has been the Russell, then the S&P 500 and the Dow. Although I don't watch the Dow very closely, it's only 30 stocks. And then you've had the NASDAQ Broad Composite, then the index. So that's kind of been the order ranking of these indexes on the way up. So when we go to the NASDAQ, we're looking at the second weakest one. What did it do? Well, the NASDAQ came into this swing point high, got over it. You can see that little arrow right there where my cursor is. That was a break of that swing point high. The retest regen is up there. Well, Friday, it broke it. Another reason for you to recognize that more than likely you don't want to stick around. And so we started pulling out of stuff, and today we get followed through the downside. What is it doing now? It's coming into this swing point high. What is this? This is another retest regen, and it's after 6 bars. Same idea, same concept. It says it should try to bounce. If you think about the timing of the Fed, you think about this pullback, you got to think they're going to try to bounce it tomorrow. Now, that could be influenced by other things, and we're going to look at some of those other things in a second. But you get the picture. You see what's going on. That tells you, hey, you don't want to load up on shorts here because you should be expecting some sort of an attempt to bounce. The strongest index, of course, has been the Russell. That was the one I was just talking about. And if you look at the Russell, what is it doing? It's coming back into a retest regen as well. Now, the Russell had already tested once, gone up, come back, and it's testing it in, and it's doing a full retest regen on the second attempt, which is usually what you would expect. As it comes back in, it goes all the way to the bottom of the high, test into it today, almost to the penny, I believe. Let's see what the numbers were. It was 11.4585. We got to 11.49. So you got within $4. You push down into it. What are you going to try to do? You're going to try to reverse this thing and pop back out of it. What are the odds of that? Well, they're not as good, right, as a first time back. And so those odds, about 62% in this particular case. So you can expect about 62% this thing's going to flip around and try to bounce. Now, if you take them all together, that says, hey, there's a pretty good chance that you'll get some sort of a bounce in front of the Fed, it looks like. If not tomorrow, maybe you go sideways and you get a bounce the next day on the Fed potentially. So anyway, the ideal here is that, at least from a neoclassical view, you're kind of set up to try and bounce this thing. Now, what are the other factors? Well, because all the world markets are kind of tied in together, you have to look at the others. You can't just look at the U.S. market. It's not an island by itself, even though sometimes we think it is. If you look at the emerging markets, right, emerging markets have been getting beat up. Remember the big spike up, the ABCD structure we were watching completed? We talked about it completing, or it was almost complete if not. Got very close if it didn't get it. I think it actually completed or got very close. So we got almost up there, right? I think we were talking about this swing point high I was going to try to get into. Didn't quite get there. And then what does it do? It reverses hard and fast back the other way. This is fast money going in, fast money coming out. They don't wait around to get in, and they don't wait around to get out when they move that fast. Why is some of that stuff moving like it is? Well, just take a look at the banking index in Europe. Tell me something isn't right in Europe. That's the daily chart. Here's the same index on the weekly chart. You can see the damage coming into this swing point lows high and this swing point low over here. You got all the volume laying down there at the bottom. This is going to come back and try to test it now. Had a nice little run going, but it gave it all up, fell up here to get over the highs, and they start selling again. If you look elsewhere, currencies have been a big factor, will be a big factor with the Fed and the Bank of Japan on the same day, on Wednesday. You got Great Britain the next day, and you got the Brexit vote next week. So a lot's happening here. Today, the FXE actually does a bullish engulfing. It flips around, engulfs the body. This says it's going to try to bounce some more tomorrow. If it bounces, it's going to try to push the dollar down. If you look at the dollar actually was an inside day, so it doesn't tell you anything. So you kind of go with the idea that the FXE is the one that's driving the action here in terms of a tell. If you look over in Japan, which has been beaten up, Japan's going after the highs. Looks like they're going to try to tag that high at least tomorrow. There's volume up there comparatively. Expect the Japanese yen to rise a little bit more tomorrow and maybe get some sort of a pullback. Now, if we get a surprise out of the Bank of Japan and they do nothing, right? We could see this thing take off again. There's an ABCD structure in place. Japanese yen going up puts pressure on the dollar to the downside. That would help the dollar get weaker no matter what the euro does, because these two are the largest weightings in that group. What happens when the currencies move? Well, they move other things like the overseas markets. So if we go over, and we just talked about the euro, you know, we had seen that the euro was moving to the upside, even though we got the pullback. We had that bullish engulfing today. Let's take a look at what's happened in Euroland. Now, I'd been talking about the SMI, the Swiss market, had been pretty much the best market to look at here of late. Swiss market was the only one that was holding up a little bit better. Now that it's starting to give it up, it's giving up the ghost all the way back to the downside. It's back into the big bar, going to try to reach these lows on this move, it looks like, on the downside. If we go over to the more mature or the larger, more weighted German DAX comes under, breaks two swing point lows, gets into the high of this low. If you look at it on the weekly, that's where the volume is on this lower low, and it's going to try to get to that. This seems to be the driver now. 9337 seems to be the target. That says you can drop another 220 points, another good clip to the downside. Been dropping them pretty fast. 1.8, yeah, it was 2.66 and 1.8, and off of that was 1.7. So you've had 1.7, 2.6, that's what is that, 4.3 or so, 5, almost 6% in 3 days. You probably can, get a bounce here pretty soon. So, and then maybe this just sets up an ABCD structure to get lower. That's the German market. If we look at the CACs have already attacked the low. They're under it. Breaks swing point lows, breaks all three of them on this time frame. You go to weekly, it's into the high of the big volume low. Wide price spread bar, 4220 was the number there. You're trading it at 4227. Actually didn't get into it. Going to get into it tomorrow. I think you might see a bounce out of this tomorrow. I think that's going to lend itself to a bounce in the U.S. markets that we were looking at earlier. How far can they go? Think bounce, folks. It's probably just a bounce, and then we'll see what they do trying to press it to the downside again. That's it for tonight. Thanks for joining me. Seminar, folks, be sure and read your emails tonight. We start tomorrow. I'll see you there. Take care. Good night.